Happy Monday, traders, and welcome to a fresh week in markets. End of last week in the US session, we did have some important economic data that came out. That was the fourth quarter US GDP and the second revisions to that. What we did see is that came out was revised much lower than was expected. So from 1.7% down to only 0.7%, so growth just over zero. So look, that's not good in the respect that we've obviously got an inflation spike coming in the coming months with what's going on with crude oil prices and the war in the Middle East. And we've also recently saw the employment data weaken, where we've seen the 3-month average for headline payrolls now been revised basically down to almost zero. So no employment growth, we're going to have an inflation spike, and we've got growth that is slowing and going towards negative, down to zero. So that is the worst case scenario when you look at an economy, because that is the definition of stagflation. At the moment, the market isn't paying a lot of attention to it, obviously, because it's got a bigger focus. But no doubt, look, if the economic data does continue to deteriorate, no doubt that the market will be forced to focus on this. Anyway, on the war front, this weekend there wasn't a hell of a lot of big market moving headlines. The one thing that we did get that was meaningful is that Trump is trying to get a coalition of allies to come into the Strait of Hormuz and give military escorts, obviously, to the oil tankers. A couple of questions on this, though, is that one, how many allies are actually going to commit to this? So far, really haven't seen any countries or any allies being vocal saying yes. And secondly is that when would this happen? And I would say that probably not sooner, probably not any time in the short term, that is for sure. Like, it would take some time even for the boats to sail there. So we still have disruptions to obviously oil supply going through the Strait of Hormuz. Now markets have just opened, and we have seen crude oil. It closed on its highs on Friday at just below $100 at $99, and we've seen a small gap open higher. So crude now is opening above $100, and so far it's just traded to a high of 102.5. So nowhere near as violent or as aggressive as last Monday's gap open, where we did gap and then trade spiked up to $120. So far, the market open Monday has been a lot less violent and active, and yes, more subdued. But look, it is not rocket science. Risk is going to follow crude. We are all crude traders. So if crude goes up, and obviously the short-term targets for crude is a retest of those 120 highs. If it goes up towards there, breaks that, risk is going to get smoked. But obviously retreating, going back below $100 is going to be risk positive. So all eyes on crude. It is still the number one focus and will continue to be. Anyway, moving along, this week is a huge week for central bank meetings. We've pretty much got every major central bank globally meeting this week. So the first cab off the rank is the Reserve Bank of Australia. They meet tomorrow. Market is expecting them to raise rates, so to take the Aussie cash rate from 3.85 up to 4.1%. This will be the second rate rise by the RBA. So, 50 basis points back-to-back meetings to start the year. And also, market doesn't expect them to stop there. They believe that still that the RBA is going to raise again, probably around April meeting, or April or May. So what we do have is we've got an RBA that has now the biggest cash rate out of all the major global central banks. and that cash rate is interest differential is growing bigger in the Aussie's favour. So look, this is going to be no doubt a tailwind for the Aussie. The Aussie at the moment, being a risk currency, it has traded lower on the back of what's going on in the war and all the war headlines. It's opened up just sub 70 cents. But look, anytime that risk is bid or the dust settles on this war, this tailwind of the RBA having a high cash rate compared to other global central banks certainly is going to spike the Aussie a lot higher. So anytime risk is bid just by Aussie, it will work. Okay, so moving along, the other central banks, we've got the Bank of Canada on Wednesday night or early Thursday morning, Aussie time, but also the big one, the Federal Reserve meets for the first time. Now, market expects no change in rates, but obviously what is going to be closely watched is Powell's press conference and exactly what his thoughts are on how high this inflation spike potentially can be due to what's happening in crude, and exactly what the central bank's thoughts are on monetary policy and exactly where it is going to go. So no doubt, like pre-war, market was penciling in a couple of rate cuts by the Fed this year. Now they're sort of pricing that out, but certainly they are not pricing in a rate hike. So if at some stage, for whatever reason, Powell starts talking about the potentially not only cuts off the table, but if inflation really does spike, then they might have to do something that no one is positioned for, and something that obviously would be a big market negative is if somewhere rate hikes are mentioned. Anyway, so all eyes, it's going to be a very interesting central bank meeting. And then on Thursday, we do have a couple more important meetings. We do have the Bank of Japan meeting. This is a central bank, just like the RBA, that will need to raise rates. Market is expecting it at some stage in the next couple of meetings, but the Bank of Japan has got a currency problem again. We've got dollar yen at almost at 160. This is sort of a line in the sand for the Bank of Japan. It is 40-year lows for the yen. So it would not surprise if the Bank of Japan brought that rate hike sooner and surprised the market with a rate hike at this meeting to get in front of inflation as well from what's happening with crude, and also to help the currency. So I would not be long dollar yen going into this meeting, and bias is probably having a short, because obviously the levels are very attractive as well. Then also there's a Bank of England meeting, and we finish on Friday with an ECB, and then you can throw on a Swiss National Bank meeting as well. But the big central bank meetings really to watch is going to be the RBA, because they will raise, obviously the Fed, because the most important central bank globally, and how Powell talks about the war and the potential for where he sees inflation going. And then also the Bank of Japan, because potentially these guys could hike as well, surprise hike. Anyway, good luck. It's going to be another volatile week, and we'll check back in with you shortly.